Hello traders, welcome back to my channel. Today I wanted to bring you a quick tutorial video with a very important tip for traders, most specifically for people using volume profile, but even if you just use naked price action, just support resistance trading, this applies to it as well. But the volume profile tool, I'm going to show you how this will make things just a lot easier to visualize. Before we dive in, make sure to subscribe, hit the thumbs up, share the videos. All your support helps the channel keep growing and bring you all content like this. Okay, so I'm not going to go deep into volume profile terminology and strategies. I have a lot of videos and courses dedicated to that. What we're going to talk about is the number one mistake that I see people make and that I make myself as well when it comes to trading, mostly due to impatience or just not really waiting for the clear setup. So let's just bring the whiteboard quickly. So if you have a market, and let's say you have a market that's like this. So you have a clear level of resistance and a clear level of support. You've probably heard the saying, buy low, sell high. This makes a lot of sense because obviously if you're going short, you want to be selling as high as possible. And if you're going long, you want to be buying near the bottoms. What's the problem though? People's psychology works where they want to chase things. They try to predict and anticipate things before they get a clear confirmation of what's going to happen. If we put a volume profile on this, we would obviously have a high volume node here because of all this volume that has been accumulated. And then we would have big edges here on the profile like this. So this would be our low volume node areas. You can go look at all my tutorials on my channel and my number one trading rule as well when it comes to volume profile. It's all there in my playlists. But the biggest mistake people make is instead of doing the buy low, sell high, they try to sell the bottom of a high volume node, or they try to buy the top of a high volume node because they're trying to anticipate a breakout. And this applies to all time frames. You know, this could be a weekly, a daily, 1 hour. This could be a 5-minute or a 1-minute chart. It applies to any market on any time frame. The biggest mistake you want to avoid is trying to chase a breakout on the extremes of a high volume node. Okay, so let's just go over a few examples on TradingView and on Sierra chart, and I'm going to show you how also with order flow tools like Delta and Footprint, you're also going to be able to see why this reasoning happens. And like I said, even if we didn't have this volume profile, you can clearly see, for example, here you have a support level. So basically, the same rule of thumb applies to just basic support resistance trading. You do not want a short support. You do not want a long resistance. It's basically what we are talking about here. So over here, obviously this profile is already all the way developed into the end, but let's just do a chart replay. Let's cut off the chart like right here. Okay, let's just do a chart replay. Let's cut it off right here. And now let's just hit play here. Let's put it at 3 times speed. And so now what do you see happening? We have a clear level of support here in the volume profile. And as you can see, sorry, that moved quicker than I thought. But as you can see, when we come down here and we're hitting this level repeatedly, this edge is becoming more and more prominent and we have a void in volumes. Every time this comes here, there's late shorters and traders that are looking to get in on the impulsive move. They're just trying to trade a breakdown of this level here. Now you can see this looks very tempting too, because you can see we have this big impulsive move. We have a gap here, so you can have a clear target into this high. That's the next logical level. But what you want to avoid is just shorting when you're back down at the bottom of a high volume node, because as you can see, what this does is it traps aggressive late shorters in this case, and then just rips up. And if we zoom in, you can even see, if you're trading like classical patterns or something, what do you see here? You see a descending trend line, and you see a clear support level. So this looks like a classic descending triangle, and we're just looking for a breakdown here. This is very, very common trap that we have when it comes in trading, where people are just trying to get ahead of a breakdown into the bottom of a high volume node, for example, and then that is when they just get, ripped up on when markets most likely are just going to rip back up and hit their stop losses. Okay, for this, what I would like to see in order to have a higher conviction is, I mark off the edge of this, and you can see here there is times where you're going to have deviations or fake outs. For example, here we did break down into around this previous high area and this small consolidation. We came back up and retained this level again. We accepted back into this node. But what I would like to see, if I'm looking at a 1 hour chart, to have a higher conviction, let's go into a daily chart. This is the same profile on a daily chart. What I would like to see is a daily close through this level. If I have a daily candle close here, like if the body of this candle closed like this, now for me, okay, now I say, oh, okay, now this broke down. Now I can look for backwards retest, and then obviously this will be my first logical target, filling this in down into here, okay? But you want to wait for a high conviction breakdown from that level. If we go into a Forex chart, this is Euro US dollar, and this is the daily session profiles. You can see the same thing. Obviously, these profiles have all been developed already. But for example, if you look at this node here, we're coming here towards the end of the day. Volumes are lower, and you can see right here, we have support, resistance. We break down above again into this node. Here is our cuts in volumes, the bottom of the node. So why would you want to be shorting here? If you're going to short, then you try to short the upper edge. This is what I talked about in my number one volume profile trading rule, is that if you're in an uptrend, then you're going to want to be longing the bottom of a node. If you're in a downtrend, you're going to be wanting to short the top of a node, okay? In this case, if you're not positioned from the top here, this is the last place you want to be shorting, because you're at the bottom edge of a node, okay? Same thing here. You can see we have this big profile that was developing. Probably once we're around this point, this profile has already been very developed. So right here, why would you try to long right on the edge of this if you can see it's been resistance many times? Yeah, of course, there is a chance this could break out and take off, but trust me, the odds of a breakout and just a strong move in one direction happening, unless there's a big economic, like a news driven move, are very low. So if you're coming up into here, this is the last place you want to be going long on the edge of this node. Okay. And finally, let's just go into Sierra chart, and the thumbnail for this video, I took it from here. This is the extended trading hours in the ES futures market, and I have my volume, my order flow and volume profile tools. This is our session profile, and then right here I have my vertical delta profile. Delta shows you the aggressive executed buy or sell orders, and I wanted you to look at this area. Just look at the level of absorption that is happening here. Look at all the aggressive selling that is happening at the lows right here. And I tell you, there's so many times that I've been trapped myself, and I still find myself sometimes falling into this trap, and then I quickly realize I'm offside and have to exit or bail out of a trade. If you see markets coming down here, obviously this profile is very developed now, but once we were like around this point, there was already a big edge right here. So when we're coming down here and here, why would you try to short this? Like, I know you say, oh, but this level, it keeps getting hit. I was told that the more a support resistance level gets hit from the same side, the weaker it becomes. Yes, there's some validity in that, but like I said, I want to see a solid breakdown from this level, and then we can look to say, okay, I missed the breakdown, I'm not going to chase it, I'm going to let it come back, and then I can try to short this level. Support broken, turn into resistance, and I can define my risk better. If you're trying to chase a breakdown and you go short, let's say you go short on this spike as it was forming here, where do you put your stop loss? I mean, your stop loss, the most logical level is below this high. And, you know, where's your target going to be? Well, in this case, you would have to, you know, move this chart up, and, you know, probably your target will be, I guess, around here in this consolidation before this breakdown, and you have a little gap. This is a 5-minute chart. So if you're trying to short here, I mean, if you look at this, this is barely like a 1-to-1 risk reward. That's terrible risk reward for this trade, and you're getting in at the least efficient place in the chart. Okay, so in this case, what you want to do is, obviously, if this looks like it's going to break down, you want to try to get up on retracement up higher, because look at all this absorption. Passive limit buyers, big players, are using all these late shorters and aggressive sellers that are trying to anticipate a breakdown from the bottom of this high volume node, and they're absorbing all this selling to load up their longs, and then market in this case just rips and everyone is offside and has to close. Okay, so pretty much that is the biggest lesson. Again, when you have a high volume node, you do not want to go short on the bottom edge of a high volume node, and you do not want to try to be long on the top edge of a high volume node. You can see right here the same thing. A lot of aggressive buying. There you have a little deviation, and then back again here, more people trying to pile in to buy at the edge, and they're now all getting squeezed to the downside. Okay, so that's pretty much it. Wait for a good breakout. Ideally, if you want, you can even go into a higher time frame to get a more solid, like if you're on an hourly, wait to see if you have a solid daily or 4-hour close through the edge, and then you can look to position on a retrace or a retest. but just do not try to chase breakouts from the edges of high volume nodes. Okay, you should be doing the opposite. You should be looking to short on the top edges, and you should be looking to long on the bottom edges, and that's going to give you your best risk reward bets. Okay, that's pretty much it for the video. Hope you guys enjoyed it. Thank you very much. Remember to subscribe, hit thumbs up, share these videos. Thank you for supporting the channel. Check out my website for more info on all my trading courses as well. Take care.